Most of what you see today in crypto won't even survive the next bear market, simply because after each market, only utility remains. Now, while everyone understands that at a fundamental level, I will say that we fail to realize that the ones that do survive will be the leaders of the global economy. While we may think that crashes, a lot of people lose a lot of money. Yes, that is true, but they leave behind real utility, real use cases. Think back in 2018 when the ICOs, think back in 2021 with the DeFis and NFT projects. After that, Bitcoin became stronger than ever, and Ethereum became the leader in Web3. Now, only the builders were left behind, but from that, we became the massive crypto market that we have today. Crashes are essential for crypto, simply because it's a purification phase. Every time we go through a crash, we come back stronger than ever and ready for more and more innovation and real world utility. We have to understand that after the next crash, we have to understand that only a few things will remain. And these are 5 things that I think that are essential for the future of crypto. First thing I want to mention is decentralized exchanges. So decentralized exchanges essentially are your Radium, your Uniswap, etc. And why I believe exchanges are going to be, decentralized exchanges in fact, are going to be one of the leaders is simply for the fact that the future relies on freedom. While the mass corporations and the government are pushing this centralized governance over crypto, I think more and more people are moving into this self-autonomy and freedom for self ideology that they can do things themselves. They don't need a governance over it. The whole idea of Bitcoin was self-regulation. And so these decentralized exchanges operate where you can have your own wallet and directly invest with different coins, trade with different coins, trade value instantly without a middleman. Now, when you think of exchanges, your centralized exchanges like your Binance or your Coinbase, etc., these platforms essentially not your keys, not your coins. And so a lot of times when you invest your money on these platforms, let's say these platforms go bankrupt, then you will lose all of your money. With a private wallet that you own now, like a MetaMask or let's say a Ledger, you have your wallet on your Ledger, you have your keys, you can use these centralized exchanges to trade directly. Trading is eternal. That's something that we've been doing since the dawn of time. And so I think genuinely in crypto, decentralized exchanges are gonna come out on top of the next bear market. Next, I'm gonna pass it on to stablecoins. Now, stablecoins is a neutral ground. It's a neutral ground simply for the fact that that's where everyone can agree that a dollar is worth a dollar. And so let's say, for instance, you invest in something like a Bitcoin when it was at a couple cents per share or a couple cents per coin, and Bitcoin goes up massively. You then transfer that into USDC. You then have that money in hard cash. You can essentially count a USDC dollar for a real life dollar. And so that's a neutral, stable ground in terms of value. And everyone and every government can agree to that across the board. Let's say, for instance, USDT is backed by the US Treasury bonds. And so every dollar is worth a dollar. That's understandable. Next, we have meme coins on the table. Now, I know this one is kind of, I would say, almost controversial because let's think about it, let's be realistic. There's a lot of shillings that happen with meme coins in terms of influencers and etc. But long story short is that stories and communities are the backbone of our society. And so meme coins on the other end, a lot of them will vanish, disappear, we never heard of them again. And a lot of them are going to come on top, simply for the fact of the strong communities behind them, the strong meme culture that's behind them, the real world utility that can come from it. You have physical products, you have digital products that can come from it. And so these tribes get built stronger, they become more healthy and less toxic. And even sometimes toxicity is the community. However, at the end of this bear market, only the strong survivors will stay on top. Think of it as in your Dogecoin, your Shiba Inu coin, you can think of your Monk coin, your Pepe coin. All of these coins have a lot of community around it. Your Pengu coin. And so on the other side of this bear market, we have strong communities that are sticking together, stronger than ever, creating more value into the real world. Now, moving aside from the fun stuff, let's think about something a little bit more sinister that's happening in the background. In terms of Web 2, in order for you to log on to a lot of platforms or apps, you need to log in using Google. The problem with this is that, let's say for instance, you forgot your password or whatever, you get locked out. But the difference is with Web 3, you then log in with yourself. You have a digital ID with Web 3 that allows you to log in anywhere, anytime with yourself on a digital ID. You can even log in using your wallet. And that's that's becoming more and more popular in the Web3 space. Let's look at something where the government is now partaking more of. They're looking more into security. They're looking more into real world asset allocation. But before getting to security, let's talk about real world asset allocation. Now, real world asset allocation, what does that mean? Essentially, is they are starting to digitalize a lot of illiquid assets. And what this does is pours trillions of illiquid assets into the digital economy. And that creates massive value, massive demand. Instead of you being able to afford a home, let's say a real home, it would take lots of savings or even, let's say for instance, lots of time. On a blockchain, essentially, you can then do that automatically at a fractional of the price. So something as illiquid as a house could be sold, instantaneously to thousands of people even. You can own 1 of 1,000 of a house. Not technically ideal, but then you have real world assets where then if assets goes up in real time, then your money goes up in real time in terms of the digitalization of it. And so governments are looking at this, big corporations and etc. are looking at different ways that they can then increase their wealth by allowing a wider audience to be able to invest in something as expensive as an illiquid asset. Now, I spoke briefly about security in the infrastructure with smart contracts. Now, smart contracts are the basis of crypto, fundamental of the fundamentals. These allow orders and they have restrictions along everything. Now, you have to understand that with more capital coming into crypto, you're going to need more and more security for the simple fact that people want to protect their money. People want to protect their wealth. You don't want to invest in something that you're not sure that it can protect your money. And so if you want these bigger investors to come on in, then crypto has to become more and more secure and structured in a way that everything is safe and governed. Now, platforms and even companies, coins, I should say, like Chainlink, QuantStamp, etc. These are different crypto coins that are essentially making sure that they're doing some behind the scene governance over the security of crypto, therefore making it more stronger and more secure against attack. Because let's be real, there's been billions of dollars that has been stolen due to hacks and different raids and viruses that have been implemented into these smart contracts. But at the same time, the more and more we can make them secure, the more and more we can have more capital flowing in. If you want to invest smartly, you just have to ask a few questions. Does it solve a real problem? Can it survive without the hype? Because it has real utility. Does it make crypto faster, safer, or even more fair? Is it truly decentralized? Remember I said decentralization is the basis of crypto. Think of your Bitcoin, it's basis of decentralization. Does it have a loyal developer or user community? And so these 5 simple questions that you can ask yourself will really make a difference in how you move on investing after this bear market. So what did we understand in this video? Every crash destroys greed, but it leaves behind real utility. Crypto isn't just about making money, it's about creating a new financial system that works for everyone. Not just a select few, but a financial system that works for everyone. The next crash will come, but when it does, you need to focus on which coins are solving real problems and which ones are gonna survive. Thank you guys for watching this video. If you guys have learned anything at all valuable, please leave down below for the next person to see. Just comment, share, subscribe, and see you guys in the next one. Peace out.